Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a very sunny Denver, Colorado this morning. I am pleased to be joined by my friend, fellow Schwab coach, Brent Moores. Good morning, Brent. How you doing, bud?
Doing great. Doing great today, Kevin. Glad to be here. How are you?
I'm good. You know, the market wasn't terribly fun yesterday, but some of us traders tend to think that a little volatility makes things at least a bit more interesting than we've seen, right?
Yeah, can't go up every day, and these little pullbacks probably actually are a little healthy on the market.
Commonly, yes. So we're going to look at the levels, as we often do here in this show. Of course, you know, we look at those levels of support, try and provide some insight as to where selling might run its course. We'll see if today is a bounce day or more of a continuation to the selling we've had of late, but that's a little early to be discerned just yet. We are joined this morning by Barb Armstrong in the chat, so make sure you say hey to Barb. She'll monitor for comments and questions that Brent and I are unable to get to, but of course, we want to hear from you, so please feel free to post in there for the duration of the show. You want to make sure you're subscribed to the YouTube channel. We, of course, call it Trader Talks. Make sure you're subscribed there. And also follow the three of us on X, Barb Armstrong, CS, Kevin Horner, CS, and Brent Moores, CS. Now, let's get to our disclosures so that we can jump to the charts. First and foremost, please remember that our conversation here is exclusively for your information and your education. We do not make recommendations. We do not make endorsements for any specific approach to trading the market. We will discuss technical analysis in this class, of course. We always cover concepts and strategies traders might look to employ for themselves. But remember, none of these are recommendations. The concept we offer is one of putting a puzzle together, right? You have many pieces of the puzzle, and you should utilize as many of those pieces to discern the picture that we're building here. So don't make decisions exclusively off technical analysis as well. All right. Of course, here in this show, we review the market broadly. We start with a top-down review, so we'll hit the biggest of our indices. We'll work our way through those, and then we will get into sectors on the move, stocks in the news, etc. But I noted it. We want to hear from you. We'll keep an eye on your questions. We'll try to bring those in as well. So if there's areas of the market we can address, areas you want to see that we haven't, don't hesitate to put those into the chat, and we'll see what we can do for all of you. Now, Brent, the SPX today, yesterday fell to the 20-day. Today, that looks like a very, very small green bar to this moment. Way too early to suggest anything, but based on yesterday's price action, we might have fallen to a level where traders are looking to deploy new funds here potentially.
Yeah, and you know, just to kind of follow up on the idea that we had a pretty bad day yesterday, I guess, in the market, that bad days can be trading opportunities for traders. So you know, it can actually be turned into a positive in that sense. Now, obviously, if you're fully invested in the market yesterday, and assuming you're bullish, it probably wasn't a great day for you. But hey, maybe you're looking for an entry signal, and you needed it to drop a little bit. That we could be there because we are at, I think, by a lot of measures, a support level. Now,
sure,
support levels can be broken, but we're right at the 20-day. We're right at where the highs used to be, an old resistance that we broke through, which would become a new support level. And we kind of had this island gap there up and then a little gap down to that level. And so we'll have to, you know, that'll be kind of an interesting thing to see how the day progresses here on this gap.
I think what you're talking about is those 6 sessions there, right, Brent, where we gapped higher, held it for 6 sessions, and then gapped lower. I think it's pretty intriguing to look at that on a intra-period chart. This is my hourly bar, everyone. And you can see that's the action, everything above the white line. So you had this period where we made that higher high, and all of this was cool, except for the fact that we've now fallen below a gap level. And Brent, we talk all the time about the importance of gaps and how they can act as areas of support, areas of resistance. This, for the short-term trader, gives us a ledge against which to base decisions for a lot of those short-termers, doesn't it?
Yes, and this highlights, I think, it's helpful to look at different time periods. I think this is probably easier to see on this chart, zooming in versus the longer term chart. And yeah, I mean, that's kind of a key level, and we'll see where we go for the day here. I mean, we have a 1 hour chart up here, so we're just basically looking at the last hour right now, but we'll look and see where we go over the next few hours. But a bounce here would be a nice strong indication that maybe the support level, which is basically the green line, and you can't see that 20-day moving average here on this chart right now, but that's kind of about where it was. We'll see if that holds on that.
Yeah, we sure will. I think those are the levels. I always enjoy it when the levels I draw in on the daily chart come into my intra-period charts, because it really helps me to understand the levels that matter to me in my time frame. So when I tighten the window up a little bit, this is pretty helpful. I mean, if they would bounce, right? We're at a spot where a bounce could very well play out. We're at a spot where if we bounce, Brent, we might find ourselves losing steam as we rally into the 6,800 level. Another round figure, often round numbers play into things here on the SPX. And so that gives us something to keep an eye on as it relates to the SPX at least. Let's look at the NASDAQ, the tech heavy group. I saw a question in the chat about being heavy in tech, and oh my goodness, I drew in a lot of stuff here yesterday in my after the close segment. Let me go ahead and clear out my draw set here just so we can see it clearly. Had the same thing here, Brent.
Yeah.
A gap move that wasn't maintained.
Yeah, a lot of similarities here on this. So again, we'll look for the bounce today. Now, if we don't bounce and we continue down, then we have other potential support levels. Of course, on the NASDAQ, we're a little bit above that 20-day. We'll see if that holds if we go down. And beyond that, we probably, we have a low back in, I don't know, mid-October that we could possibly, the NASDAQ kind of went sideways in that period. Wouldn't surprise me to hit there. And, when you look at when you look at the RSI, you can look down and you can see, hey, would we achieve a lower low on that RSI down there if we were to get down there? Now, we're a little ways from there at this point right now, but that would be a significant break using not the primary chart, using the secondary indicator, the RSI, but sometimes they can become in handy.
So, Brent, one of the questions in the chat here this morning is about potentially incorporating options as a means of protecting profits. I'm wondering if now is the time to do it. Of course, I think it's difficult for you or I to say one way or the other in such a situation. We all trade our portfolios differently, of course. But Brent, talk to us a little bit about that process in incorporating protective concepts like put options on positions you may have held for a while and you're looking to protect. I think the key takeaway, if you're wanting to protect profits, is that by buying a put, Brent, you believe there is more upside. Otherwise, you wouldn't stick with the position, right? A lot of traders would just choose to move on and take those profits. But your thoughts?
That's something a lot of people skip. I'm bearish on this position. Well, just, sell the position is maybe the first course of action you can consider. But sometimes you're cautiously bullish, or maybe you're particularly concerned about things like a government shutdown or some geopolitical situation or something. But in general, you want to maintain that bullish position in the portfolio. There's different ways to do it, but one approach, if you're going to use options, is to do what we'd call a protective put. Essentially, you're buying a put option, and you can do it individually on a stock. You can do it on an index, which may be the strategy if you're trying to do this for a whole portfolio. But let's consider an individual stock here. Let's say you have a stock, you think the stock's going to go up, and you buy a put, say, for example, out of the money on the put. In other words, the put strike price is going to be below the current price of the stock. You can do that, and it's going to cost you. It's meant to protect you. But if the stock goes down while you're losing money on that stock, the put would presumably be going up in value, offsetting, or at least partially offsetting, some of the drop in the stock. It probably won't offset it entirely, to offset it entirely, you'd have to probably buy a deep in the money put, which would cost you a lot. So we're trying to balance between the expense of the protection and the level of protection that it is providing. Now, one other thing on puts, long puts, if you were to do so, what it does is as the stock drops further and further down, the level of protection actually goes up. It increases because, and this may not be, if you're not trading an options trader, this may not make sense, but the delta of that put would go up the more the stock goes down. So it is a choice. We have webcasts out there on doing protective puts. I know Barb in the chat has done webcasts on doing protective puts out there. In fact, Barb, maybe you could throw a link in the chat to something on protective puts as well.
Great idea. Obviously, we like to remind our viewers that you're in the right spot if you're wanting to learn about such concepts. This channel is the place to do it. You've got hours and hours of content archived and ready for you there in the channel, specific to hedging, protecting profits, so on. You can actually search for some of those key words, like protective puts, for example. You're going to find a multitude of available videos there. But I think the hard thing for a trader is to be thoughtful about when to apply those scenarios. Yes. I generally think traders lean into the idea, Brent, that if they're sitting in profit, that they're going to protect it not against unforeseen events, a so-called black swan event, because we call it a black swan for a reason. You don't see that on the horizon. Traders who employ puts commonly do so around known events of risk, instances where they expect pricing to maybe be volatile, like an earnings period, for example. That's when it's more commonly employed because the owner of the put is adding money to their cost basis. They're increasing the cost associated with their underlying stock. So it can be a balance, but it's a great question. It's not necessarily a perfect topic for us in this class, but I wanted to make sure we brought it up and remind our viewers that we've got a lot of that type of content. Great points there, Brent. Brent, let's talk about the Russell here. I'm going to kick us off with the NASDAQ because basically everything we see in the SPX and the NASDAQ 100 are pretty consistent in terms of trend. Now, the Russell yesterday broke the 50-day for the first time since July. Now, in July, that break was very short-lived. We got a nice green, beautiful candle the very next day, a close above the high of this being the low day and a pullback. So what we're looking for today is something similar, isn't it?
Yeah, we'd like to see a bounce here. And if we don't see a bounce, we're threatening those kind of early October lows before too long. We do have a lower, this is going to be a lower low, and we're well below not just the 20-day, which was kind of the area we were looking at on the NASDAQ and the S&P 500. We're actually below the 50-day. And so we'll see, often, we'll talk about things like the Horner rule or whatever, just to trying to, say, well, look, if it's down below 1 day or something, that happens all the time. But is it going to maintain its level below, say, the 50-day or our other old support level? If it stays down there, it's a more bearish look on the Russell, the small caps right now, than the large caps. Probably not surprising. It tends to be more volatile. Just like smaller human beings tend to be more volatile than adults. Smaller cap stocks tend to be more volatile. And these, and sometimes that means they're on a higher high, and sometimes they tend to get hit a little bit harder.
It's a very good point, Brent. Yeah, the little people in our lives can be a little more volatile. You're absolutely right. Let's break this down. If we pull this back into the hourly bar, you're going to see some those areas of where bounces have come into play. As you know, everyone, I always and often encourage at least moving off of the daily. Check your intra-period chart, sometimes a 5-minute, sometimes a 15, maybe an hour, maybe 4 hours. Take a time frame that makes some sense, but also expand your view off of the time frame you traditionally trade in so that you can make sure you're getting as much insight to the current trend as possible. As a good example, I think, Brent, all of that action we've seen, we've really just gone sideways. Yeah, we made that higher high in the Russell, but the lows in here are what kind of stand out to me. And so if we, for example, didn't maintain the level that we held yesterday in the short run, I think my second white line down below here, right here at around 2,400, which probably stands out in the grand scheme of things, that becomes an area for a potential test. But, a good reminder to always look at multitude of timeframes here, Brent.
Yeah, and we'll have to see. And this is technical analysis. We're looking at different timeframes. I think that's important. But regardless of what technical analysis we have done, news events can certainly affect this. Interest rates in particular, we talk about this quite a bit. Interest rates can tend to affect small caps more. And so we'll see how that plays out as well. We've seen interest rates lately. Well, they had been trending down, and they're still, I think we're still probably in a downtrend, but we are kind of at this key level. We're breaking above that 50-day, say, for example, on the TNX. And so that jump over the past week or two on the TNX probably is contributing, I would think, to the headwinds on the Russell 2000.
Yeah, I agree. The recent pop here since the most recent adjustment for the Fed has probably weighed on the Russell, weighed on small caps a bit. And the level that I'm continuing to watch is this red line, because while we may break the downtrend line I've drawn in white, Brent, if we rallied into the red line, we would be making a matching high, not a higher high in the yield. And I think a higher high in yield, an indication of moving through that 42 level, which, as a reminder, is just, if we move the decimal, 4.2% on the 10-year yield, that becomes a pretty different chart. And I think that would probably put some headwinds into the Russell if we were to rally through that 4.2. So far, everything is, we're getting some of that action that validates that viewpoint a little bit, but only, I think, through 4.2 do we start to see that really start to weigh heavily on the small caps.
Yeah, and I would say, in general, we've said in the past, you can't get too caught up in a 1 or 2 day move in interest rates. They're going to bounce around. That just happens. And you can see the general trend on the chart. We have a 1-year chart here that's maybe zoomed in a little bit, but you can see the trend of late, and it has it's been going down clearly. So that's been the general reflection on the market there.
Sure has. So, all right. So there's a look at our large caps, our SPX, our NASDAQ 100, our Russell 2000 small caps, and the yield associated with that. Let's take a peek at our semis, which also have been in pullback mode, but pull back to an area that you would expect to be relative support. Something filling in this short little gap, but holding the 20-day again, Brent. And I remind traders, because moves off the peak when you've been grinding to the upside, they never feel good. But Brent, we are so minimally down here. At yesterday's low, we were off almost 6% from the peak. What are we worried about when it looks like the trend is holding here? We shouldn't go too far.
Yeah, and 6% on some things is a lot. 6% on the SOX index, semiconductors, that's just a typical day. That's an exaggeration, but it is it bounces around a lot more than just your normal, say, blue cap type stock. And so keep an eye on the general. You look at the general chart, you can see where we're at. And you can look at the RSI. Look, we got those lows on the RSI we held of late. Yeah. And so that would be another sign. I imagine that would probably come into, if we broke there, we'd probably be breaking about the 20-day as well at the same time. And that would be, a little bit more of a sell-off on that, but the general trend is still going.
Yeah, it would be. And again, I'll try to remind everybody, if you're thinking that a drop through the 20-day means the pullback to the 50-day or maybe horizontal support, always do the math on that, everybody, so that you know what you're giving up. If you drop to the 50-day from the 20, it's about a 7% drawdown. If we go down to the horizontal support, it's about a 9% drawdown. So do that math so that you know what kind of risk you're really looking at. And that's what a lot of traders will do, Brent, is they'll look at those levels. Where is the next level? If we fall through this level, what action will I take that'll make me comfortable enough to take the index down to that next ledge with what I'm holding? And then maybe do I deploy those funds when we get to the 50-day? Do I add those monies back in for a better entrance nearer the trend line, for example? That's one way traders might choose to manage their opportunities a little bit.
Yeah. One other thing I would just say on that is,
Please.
and keep in mind, we're not just talking about trading the stocks here or some derivative of the stocks. The stocks can be kind of a leader for the rest of the market. So if you see the stocks fall down, say to the $6,300 level or point level or whatever, that would be probably not, you would probably expect to see a sell-off in the broader market as well at the same time. No guarantees on that, but of course, the stocks tends to be a leader both on the high side and the downside too.
It's true. Yeah. In fact, we've seen some charts speaking to that. You know, we just made recent all-time highs in both the SOX and the SPX. So a lot of traders look at that as potentially confirmatory in nature. And right now, you know, it's a great open for the SOX today. Again, if this is good support, the very first thing that a trader is going to want to see out of this is, can we trade above the high in our day of the pullback? So this is the day that we made our low in this pullback. The high yesterday was 71.90. So for validation of the bounce, essentially, traders are going to want to see, can we get back through 71.90 on the upside with conviction or on a close, for example? That'll give traders a bit more confidence in this bounce being a bounce spot. So we'll see how that plays out. What we don't want to see, obviously, is taking out the lows of yesterday, trading below the 20-day. We don't want to see that. But it could be said, yes, that semis are pretty well strong and leading the overall space. In fact, you know, one of the cool things you can do here, everybody, don't forget, you've got access to a multitude of tools here in the Market Watch tab, for example. You know, we look at the things like the relative strength over 5 days, relative strength over 20 days, relative strength over 80 plus days, just to get you some understanding of how the things are moving around. You can also incorporate the heat map here, Brent, opening up the heat map to reveal how tech is performing in its subgroups as well. Today, yes, we're up, but we're up mainly because of a few positions, noting here that in terms of semis, you know, NVIDIA is not leading today. Micron's leading today. So one of my, you know, this is just a go-to spot for a lot of traders, Brent. You jump in here, you look at the sector that's on the move, then you look within the sector on the move and find the industry group providing leadership. You can learn quite a bit about it. A little bit of back and forth here today with AMT down 1 1/4 and Micron up 5 3/4.
Yeah. I was thinking after hours, AMD had earnings, and I was thinking they were maybe going to be down a little bit more than they are today, but they're not, and so they're hanging in there. This is they are down a little bit, but not as bad as it could be. Not like Palantir, you can see in the far upper right portion of the graph, or Aristanet down there in the bottom right portion, kind of those bright red ones. Those are the ones that are hurting a little more. But this is a good way to see both the movement in them and the size of the company.
So always a good way to kind of keep a snapshot of things. Remember that when we start talking about quotes and looking at return details, and for whatever reason, mine is not loading my relative strength detail, but ultimately, I think it might take a minute. It's trying to. Ultimately, what relative strength is speaking to is basic return over a shorter term period of time, recognizing that returns don't always go positive. So if we are undergoing a period of drawdown and the market is dropping across all groups, relative strength would just be looking at the ones that are dropping lesser than the rest. So you can view it as essentially leaders, if you will, in leaders and not selling off nearly as much. Of course, if we are running to the upside, you want to see the groups that are leading those charges to the upside. So relative strength over the window of time it defines helps traders understand where to find that leadership. Brent, a very common situation is for a trader to take a difficult window of time where the market is in a pullback mode broadly, and then find the groups that are selling off the least.
Yeah. So, for example, using what you have that up right now, and as it's loading, so we'll continue to talk about it as it's loading, is you have three different time frames defined. You have this 5-day, you have the 21-day. So the 5-day is a week, basically a trading week. The 21-day is basically a trading month because there's weekends and whatnot. And so there's about 21 trading days in a month. And then 89 days is roughly, what, a quarter or so.
A little more than a quarter, yeah.
Yeah, a little more than a quarter. But you can see where the strength is. Now, this isn't showing what their absolute performance is. This is their relative performance. In other words, as compared to, in this case, the S&P 500, right? Right, Kevin? Yep. Just want to make sure on that. Okay, that's what you have on that. So, because you can technically have relative strength against other things, but this is going to show you what is doing well and what's not doing so well. The green are outperforming the others. The red are underperforming the others. So if you're looking at if you want something that was going from maybe weaker to stronger, it wouldn't necessarily be bad to see red on the 89-day or the 21-day. But if it's turning green, as you look more towards the left there at that green, you go, oh, wow, those are a little stronger right now. Energy is a little stronger right now. Healthcare is stronger right now. And so now for some traders, it doesn't matter. For like maybe a momentum type trader or one that is really just a relative strength trader who wants to invest into where the strength has been of late, this can be a launching point for you to go, hey, I'm going to start to look at energy stocks or healthcare stocks or real estate stocks right now. And this can be the starting point for you. Now, just because it's been strong doesn't mean it's going to continue to be strong going forward. But, look, you got to take an approach to the market, a hypothesis, which, you're going to go with the strength. If that's your hypothesis, then this could be the launching point, and then you can look at individual stocks or industries within the sector as your next step in the process.
So great explanation, Brent. I really appreciate that. Let me answer a couple of these questions. So the first was just about relative strength, 5 and 21. Where do these come from? Well, 5 days gives you the standard week, right? 21 days is pretty commonly the standard number of months in a in a trading month. 20 or 21 trading days for each month of the year. That's where that comes from. So 5-day, 21-day, 89, and I did the math on that, Brent. I'm way off. It's more like four months rather than 3, so a little more like a third of the year. But ultimately, a longer-term viewpoint essentially is what you're looking at there. So, all right. So I wanted to make sure we got to that because I thought that there was some good questions about just relative strength and ways to incorporate relative strength to your overall analysis of what's happening in the market.
Yeah, let me just add one thing to that, Kevin, and that is just to continue on with something. And we may not have time to do this and watch it load, but let's say you said, well, I want to take this to the next level and look within healthcare and look and see what the sector is within healthcare. You can go up to that drop down that Kevin's clicking on there, and you can go by industry. And when you hold that right there for a sec. Notice when you're on healthcare, you have the choice of either going, hey, I want to look at all healthcare, or I want to look at one of the individual industries or subsectors within healthcare, and you can go down and you can see those listed there. But if you select all healthcare, or it doesn't matter, you can do whatever you want, you can click on that. Now it's going to bring up the stocks, and it's going to take too long to load all these.
Way too long to load.
Yeah. But the point is, you can always narrow it down to other groups there within that. I know personally, I've just kind of done a scan and saved a healthcare S&P 500 stock sector
Sure.
or watch list, and I I think that works fairly well in terms of narrowing the stocks down to the ones that are well, the more well-traded ones. And you also don't get a list of a bazillion stocks there. But you can do that same list and then go down and look at the relative strength 5 on that and the relative strength 21 on that. And then you can say, well, look, that's a stock I want to look further at.
Mm-hmm. Absolutely true. Lots of ways that we can drill in here. By the way, I think the more popular, most commonly, I'm on sector indices, which are just those 11 sectors of the market. But often you can always kick that back to the sectors and industries, which is going to incorporate all the industry groups within those 11 sectors. So you don't have to necessarily get as granular as we may have tried to there, but certainly can. I did see a question in the chat that I thought was a good one to answer. I haven't answered it in a while because, you know, when I was on the phones a lot, I used to answer questions about X dividends and earnings windows and all that kind of stuff. But Jay had a question about dividends in general and what to pay attention to. When do you earn that dividend? How does that work out? So the question is all tied to an X dividend date. So I'm just going to put up one that I know has a dividend. I'm just going to throw Pfizer in here. And I'm going to point out here, Pfizer has its dividend on 11/7. Now, that is not the pay date for the Pfizer dividend. That is when the dividend is going ex-dividend, meaning it trades without the dividend. So you don't want to pay attention to the pay date on dividend. Pay attention to the X date. If you want to earn the dividend that is to be paid down the road, you must be an owner of the position through the close of business the prior day to X. So X dividend means trading without dividend. Okay. So on X dividend date, nobody that buys it on X dividend or thereafter gets that next dividend payout. So any other little caveats that you add to that, Brent? Or reminders, little mnemonic devices you use for that?
All I would add is this. Sometimes we get a follow-up question of how long do I have to own it for before, you know, yes, you can just own it for one day. Buy it the day before the ex-dividend day, and then you're going, well, great, that's my, you know, secret to riches or something like that. I'm just going to buy every stock the day before dividend gets paid, the ex-dividend date, and get entitled to that dividend. It doesn't really work that way because the stock is going to drop by about the amount, everything else being equal, I should say. The stock's going to drop by the amount of the dividend essentially on that day. So
that's right.
It's not a secret to making extra money there, holding it, just buying it one day before. But yes, technically you are entitled to it on that day. But remember, all these on the charts where you see that dividend, technically that's the X day, it's not the payable date.
And the key that most traders lose out on, Brent, is the idea that the stock price is adjusted by the amount of the dividend to be paid. That comes out from the stock's price because it is a value associated with being an owner of the stock. So if you think about it, if, for example, Pfizer said we're going to pay a special dividend of $1 a share, and on today at the close, tomorrow is X dividend date. If today's close is $24, well, then in theory, tomorrow morning, the true value is $23. So the trader who bought at 24 on Wednesday night opens up the next day at 23, they are break even when they receive the dividend 2 weeks, 3 weeks down the road. But if the stock is rallying following X dividend date, in theory, they're making more than they could have by simply owning the stock, right? They're going to get that payout for the dividend in addition to any upside they get. So I think many traders lose sight of the fact that there is an adjustment made to the price of the stock. It's just happening in a manner that we don't see it, right? And most commonly, you don't recognize that those adjustments are made, and they typically don't have a very large impact on price action.
Yeah, and if that doesn't make sense to you, I mean, just let me give you, I don't know, this is probably a poor analogy, but let's say you have a net worth of $100,000 or something like this, and you pay out $10,000 to, I don't know, someone else, a friend or whatever. The total value your net worth isn't still $100,000 after you've paid out $10,000. That $10,000 gone to the shareholder or the friend in this analogy. Your value or your share price is now $90,000 on that. So that's why the stock price drops in the amount that's paid out to the shareholder or the friend in my analogy there in that case.
Mm-hmm. You can be forgiven, Brent. You had a kick butt analogy earlier about kids and market and volatility. They balance each other. That's the way it goes.
You.
So you're good.
Yeah, tried it on the fly. That didn't work out as well.
Quick look here, Brent, today. Yesterday I noted the importance of the rotational movement. We were positive on financials, we were positive on healthcare, and positive on staples. And today, staples are down, financials are down, and we're rallying in tech, we're rallying in communications. So it's one of those helpful reminders. It can be helpful to know, what do we expect with regard to price movement? If we're getting selling in our best groups, the groups that have been leading us to the upside, where are we likely to see that money deployed then? Well, that was defensive yesterday. It feels a little more risk on in this first 35 minutes of the day so far today, Brent. When you look at the market here in the sector analysis, is there any one sector that kind of jumps off for you today?
Let me distinguish between today and what have you been doing for me lately, I guess is the question. Materials has been getting really hurt lately.
Yes.
It's doing okay today. It's had a nice little bounce today. We'll see if that can recover, but it's been, I think, the worst performing sector over the past month of time. It's really gotten hit, and you can see that in things such as like precious metals. Gold's been kind of whacked, and silver and whatnot.
Yeah.
But that's one. So we'll see if that support level that you drew on there, is that going to hold? Is that going to be longer term? Is this just a bear flag we're forming on the sector that's just kind of destined to go down or not? Or is this a real bottom that's going to reverse on there? Right now it's looking a little more bearish, even though we've had a nice little bounce off the bottom.
It is a nice little bounce with good volume, mind you. That stands out to me, but a little precarious given the nature of the move to the downside, taking out the 200-day moving average. So we're below the three big boys, your 20, your 50, your 200. And so if we were looking at that confluence of the 20 and the 200 coming together at this 554 area, that really stands out as a spot to which we could rally, but also a spot at which a rally could pause or lose steam, or give you an opportunity for those who bought up at the lows to be considering profit taking. Remember, what once was support can then become resistance. Well, for a while there, Brent, at least since July, the 200-day had been very supportive on materials until just in the past week. So now that becomes a very important level.
Yeah. So, we'll see. As you mentioned, the volume's kind of a good thing on that. So that can be, and it's a good point, I think, that you make, and that is sometimes we don't pay as much attention to volume, and a lot of times volume maybe isn't as big an indication, but it is when you get a bullish move on the stock with high volume, that tends to be more of a bullish indication. When you get a bearish move on the stock or index or whatever on high volume, that tends to be a bearish indication. And if you get, say, a bullish move on the stock with low volume, it's not as enthusiastic of a bullish move, and vice versa with a low volume bearish move too. So volume, some people you can consider them as kind of like votes in favor of a certain direction or something like that, I guess. And so here we've had quite a few votes for a bounce. We'll see if that holds. Sometimes the winds change, and what the trend is doesn't stick. But right now it was a nice bounce.
Nice bounce so far. We'll see if that maintains. Now, I just wanted to peek on a couple of these. So you've got communications with a bounce right at support. So
Yep.
far, that looks like an appropriate area for a bounce, being that we have done so previously. A lot of traders would point that out. So, a pretty interesting spot for a nice positive move in communications today. The carry forward here in regard to healthcare is intriguing because healthcare has changed its trend, Brent. I think we can say now we have a broken down trend. We even have higher lows in the short run. I could change my line here. Let me just activate this and put it up here. There's a breakout spot for potentially healthcare. And then you've got this little, it looks like a rising or an ascending triangle in the short run, doesn't it? I mean, that's not a bearish indication or a bearish chart right now, especially having come from where we've been. If you look at this on a 2-year basis, this will illustrate the strength of that downtrend having now been broken in healthcare.
Yeah, and healthcare is a sector that tends to be a little less correlated to the market. And so it's an interesting, sometimes you look at different sectors and they kind of all like go the same way as the overall market in a sense or whatever. Healthcare seems to be a little bit different on that. But we've seen a lot of strength, when the market through some of the mid months of the year, like we kind of hit some lows in April in the overall market, and the market made a pretty strong recovery, pretty strong summer. Well, healthcare not so much, but lately healthcare's been strong.
Sure has. So, and the interesting thing is, as a sector, you got to be reminded, healthcare incorporates biotechnology, it incorporates pharmaceuticals, as well as your biggest healthcare providers. So, you got to be thinking about your United Healths, your Cigna, your Cardinals, et cetera. So it is a very disparate group. So
Yes.
Dig into
Good
this,
point.
find out where your leadership is coming from there, because it's not exclusively one versus the other.
Yes. Good point.
A couple of them have been moving up, interestingly, haven't they?
Yep, absolutely. So, yeah, so this is true for other sectors, well, to a certain extent, but healthcare, definitely. I mean, the fortunes of a healthcare insurer and a biotech company really probably have very little to do with one another, I guess.
Probably. Hey, I want to hit up a couple of upgrades for everyone today. So just a few charts here real quickly, everybody. We had Yum Brands in that staple. I think, do they fall under staples still? Let me see here. Let me go back to my fundamentals. I was thinking staples. Is that where you find Yum Brands, Brent?
I don't know. I would think maybe more discretionary.
Discretionary? Let me see. Yeah, maybe you're right. It wasn't giving me the actual definition there. So I'm going to be wrong, whatever the case. So I thought I wanted to bring it up because I thought the chart was intriguing here, having found support just this past week. They were upgraded at Evercore to in line with a new target at 180. No target is guaranteed to be achieved, but 180 would be quite the healthy premium for where we are right now, Brent, about a 20% premium versus today's current price.
Yeah. So that's right now it's it's interesting when you see these big candles, big moves, but really the stock's almost unchanged right now. We had a massive move up yesterday, gapped well up today, but with today's trading action, we're back down to kind of where we started almost. So
yep. And really, traders, we shouldn't be shocked by it because look at where it rallied to and then stopped, right? So it basically opened at the last high and now it's taking its breather and we're trading right about here at the moment. So we'll see if there's any validity to that move at all, but always like to bring you guys some upgrades and downgrades. We also had an upgrade in one that I don't think we've talked about lately. That's SMCI, Super Micro. My lines are still drawn in here. They got upgraded at KGI Securities to outperform. Had been previously at neutral. New target here is at 60. Again, nice healthy premium to that. So, Bill, thank you for bringing that in. I didn't have, for whatever reason, it didn't tell me it was discretionary, but I'm going to take it. I think that makes sense. Discretionary for Yum Brands. There's your look at SMCI. And then one more for you, Brent. What about Cloudflare? Ticker is NET. Stock had been on a beautiful move. It looks like they reacted favorably to earnings here very recently. Last week, made a new high at 260, and we're upgraded at DZ Bank. But upgraded to hold from sell with a new target at 237.
Yeah, it's a chart that even though the last 3 days have not been looking good, admittedly, I wouldn't necessarily call it that bearish of a pattern because the general trend is up. The pullback seems to be almost just like a statement that we shot too much to the upside, but now we're coming back to more of a normal level as to where it was. We've got a support level. We'll see if it bounces on that.
Yeah.
And then below that, we have a, moving averages kind of indicating the trend there. So I wouldn't say the trend is broken, even though we have some downward momentum on this.
I would agree and remind traders that, what goes up will come back. Breakouts through all-time highs commonly come back to test the breakout level. What's important isn't the fact that it's coming back, it's the price action. How does it handle the retreat to the breakout level? Does it hold? Does it solidify that level as support? So that means that today's action and the subsequent coming couple of days will be fairly important, especially around this former resistance at 230, which could hopefully now provide support at 230. That remains to be seen. Brent, as usual on a Wednesday, great discussion, man. Really appreciate you being here. Thanks for doing it today.
Thanks for having me, Kev, and glad to be here each week. And I encourage everybody, we have Trader Talks Monday, Wednesday, Thursday, Friday. Encourage you to check us out each day.
As do I. Thanks to Barb Armstrong in the chat. Follow the three of us on X. Make sure you're subscribed to the Schwab YouTube channel, everybody, and have a fantastic Wednesday. We look forward to catching up with you again real soon.